Britain is experiencing a mortgage famine. That's according to a report that's found the number of loans approved for those buying a new home fell to a 16-month low. Economist and investment advisor Jonathan Davis is with us, and in a second I'll speak to Stuart Harris as well. Jonathan, why are the people not getting money from the banks for mortgages?
Because the banks are severely restricting their lending, whether it's to individuals for mortgages or for small businesses. And ultimately, it's not their fault in the short term. Ultimately, it's their fault in the long term because, of course, they had a massive credit bubble up till 2008. They lent to anyone who could fog a mirror as much as anyone wanted to borrow. And now they've got red ink all over their balance sheets, and that's why they can no longer lend to the same extent.
Stuart Harris is with us as well, Jonathan. I want you to have a chat with him as well. He's a partner at the estate agency Carter Jonas, who cover Hertfordshire and Bedfordshire. Are you noticing this famine as well, Stuart?
Yes, I'm afraid we are. It's very difficult for people who are setting out as first-time buyers. It's also funnily enough, it's quite difficult for people who aren't looking to borrow a huge amount of loan-to-value on their property they're buying. Anecdotally, we've got some amazing stipulations which are being put on by lenders to take borrowing through, and it's very hard work.
When you say it's hard work, is it because that you could get a buyer and a seller together, and then it's just kind of just going down the road? How far down the road before they pull the rug from under the buyer?
Well, it's precisely that. The rug can be pulled at the very last minute. We exchanged contracts on quite a big sale yesterday, thankfully, and having said that, a couple of days before it was due to exchange, and there was only a 10% loan-to-value mortgage being requested here. We had a lender stipulating that a sink needed to be taken out of a top-floor room in case it happened to become a house of multiple occupation. Absolutely ridiculous stipulation being added to the lending criteria.
Jonathan, you hear the lending criteria is built in, but do you think the banks are trying to find excuses not to give money?
Ultimately, yes, because, and this is the big picture, this is the reality, the banks haven't got any money. You know, people need to realise that the losses which are going to come down the line, I'm talking about the rest of this year, next year, the year after that, are going to be felt by the banks because they are not going to get their money back from anyone because there's going to be huge commercial and residential repossessions. It's inevitable. People have got massive loans, whether residential or commercial, and they just don't have the wherewithal to service the debt. Thus, the banks are trying desperately to keep as much money as possible in their reserves. And on top of the fact that they don't have any money, the regulations which are coming in soon are going to require them to hold a greater percentage of their capital before they lend it out than they have been doing up till previously. And the gentleman from Carter Jonas needs to realise that they may be displaying what he says are, extraordinary stipulations, but it's all relative to what used to be. What used to be was that the banks would lend anything. Well, now they're taking prudent lending seriously. Thank goodness. And I'll tell you one thing.
No, it's gone further than that, I'm afraid.
And I'll tell you it's one thing. It's not easy lending that first-time buyers need to buy homes. It's lower prices, and these credit restrictions will inevitably create the lower prices, and that's how first-time buyers will be helped.
Stuart?
No, that's not true at all. I mean, I'm afraid to say that the banks and other lenders have not gone to a balanced position now. They've not gone to a prudent position now. They've gone to a completely entrenched position where the drawbridge has been pulled up altogether.
Inevitably, therefore, prices will fall. That's the reality, and that's people need to realize.
What drives any economy is supply and demand. We have supply, we have demand, and we have a situation where that is not being met artificially. It is being deliberately held back by the banks and lenders.
Ronnie, the reality is that for the 10 years up till 2007, 2008, we had a totally artificial position where the lenders would lend whatever you wanted to borrow.
I don't dispute that lenders. Well, you interrupted me. You interrupted me. I just need to come in here.
I'll let you finish the point. And therefore prices rose. What we now have is the opposite. In other words, we had an orgy of debt and spend, and now we have the inevitable hangover, and that's the reality that people need to wake up to.
Stuart, I'll let you have the last word.
Fantastically strong rhetoric to use words like orgy of borrowing and things like that. The fact is that it is true that it was too easy to borrow money. It is now ridiculously difficult. And it is not commensurate with the levels of optimism that are there in the market.
Stuart Harris from Carter Jonas, estate agents for Hertfordshire and Bedfordshire, and before that, Jonathan Davies from Jonathan Davis Wealth Management.